Okay. So let's see, which one do I want to start? Let's go there. Stop here. All right, let me share my screen. Okay, let me know when y'all can see my screen.
I can see it.
Okay. Maybe this small one. All right, so today what we're going to talk about is dollar cost averaging. For those of y'all who have been in the class, you already know about compound interest, but dollar cost averaging is pretty important. It's something that people like overlook a lot, and it's something that I found is actually more important than timing the market. And we'll talk about what that means in a minute. So, what do I mean when I say timing the market versus dollar cost averaging? So timing the market like involves the belief that you know when the market is going to drop and will only buy stocks when the market is low. And so for that, I always ask people, or I've started to learn, is that number one, if you know every time the market is going to be low, yes, you can do technical analysis and buy often, but um, the main thing is, do you know every time the market is going to crash? Like, so I guess I'll ask anybody on the, we might have some psychics here. So does anybody own, like, do you know the next time the market's going to go down or crash? Next month, the month after that, anytime? I guess I'll start with Carlton. Carlton, you know when the next crash is coming?
That's negative. Of course not.
Some people might. I mean, we might have some psychics. So that's why a lot of people say timing doesn't really work. Anybody remember this lady, Miss Cleo?
Yep.
What did she used to do? Anybody know what did she used to do, Miss Cleo?
She's a psychic.
Well, she had like she was a psychic. So Miss Cleo made millions of dollars. Like when you Google her net worth, I don't even believe it was that high, but they were like her net worth was crazy because she had people believing that she was a psychic. And so it turns out she wasn't. And it turns out that a lot of people really aren't psychics, right? So if you aren't a psychic, the next best thing is dollar cost averaging. And I heard a lot of people talk about this, and I really didn't get it. I was like, okay, cool. I knew the term, but I didn't know why they kept saying, look, this is one of the best things you can do, and this is everything that someone starting should do. And what it is the same way. Does anyone have a 401k on here?
I do.
Okay, cool. All right, cool. So if you have a 401k, you're already dollar cost averaging. So like this lady's looking right here when she's confused, what is dollar cost averaging? It's an investment strategy in which an investor divides up the total amount to be invested across periodic purchases of a target asset in an effort to reduce the impact of volatility on the overall purchase. The purchases occur regardless of the asset's price and at regular intervals. In effect, this strategy removes most of the detailed work attempting to time the market in order to make purchase of equities at the best prices. Dollar cost averaging is also known as the constant dollar plan. So after saying all that nonsense, hold on, let me see my screen working. What in the world did what I just read mean? All right, when I read it, I was like, what in the world does that mean? If anybody knows Moneybag Yo, he's got a saying that says, make it make sense, right? So it means in a simple form, it means consistently putting the same amount of money into a stock, ETF, index, or crypto every month or at a specific time. So if you got a 401k at work, you already know that every month you're allocating a certain amount of money to that 401k. Is that right, Carlton? Carlton, if you're talking, you're on mute.
Sir,
I said, so in your 401k, I know you're at work. In your 401k, you put in X amount of money every month, right?
that's correct.
All right. So what he's doing, again, anybody who has a 401k, you work for a company, you're putting that money into it, and then that 401k is basically made up of mutual funds, right? And what it's doing,
Yeah,
and it's saying, okay, cool, you're putting this in, or we're going to get you an average rate of return on your investment every month. And that can be, I mean, every year, annualized. It could be 5%, 10%, 15% if it's aggressive. And most people are getting around 5 to 7%. All right.
right.
So if you're using dollar cost average in the stock market, the only thing it means is you're going to pick a company and you're going to put in X amount of dollars every month. But you're just going to choose a company that you know is going to increase in value over time. It doesn't matter if the stock market is going up or that company is going up or down. You're going to put in a consistent amount of money every time. And so a lot of people ask, well, does it really work? Well, and this guy looks real confused here. Like, does it work? And the answer to that question is yes. If you're picking a good company, and we're going to look at some companies, then yes. If you just buy at the dip and you think you're psychic, somebody did a chart. A lot of people actually made some charts, and I started reading and watching them. And they said, okay, cool. If you bought every time there was a recession or a dip, like $5,000 worth or something, over about 40 years, you would only have about $100,000, $80,000 to $100,000 more than somebody who just put in a consistent amount of money over time. But also, like, what they figured out was if you put in like $500 a month, not on this one, this is a $100 a month chart, just into the S&P 500, which is just the overall stock market, like you would have like a 7-to-1 return over the last 40 years, right? So what it means is that you really can make a lot of money just by putting the same amount of money into good stocks every month, or indexes, or ETFs, or crypto, right?
Hello.
Go ahead. Hey, how you doing, Levita?
Hello.
So basically, we just talked about, let me give you a quick recap, if this thing acts right. We just talked about timing, people trying to time the market and buy at the right times, and everybody's trying to buy at the right time versus dollar cost averaging. And then a lot of people said, well, what is it? Because this definition is long and makes it sound hard. But all it is putting in a consistent amount of money every month. And I know like that we talked about this, and I believe you've been doing this, so that's great. If you're putting in a consistent amount of money into certain stocks every month, that's called dollar cost averaging. And we say, well, why do you want to do that? Because even people that claim they're psychic, and if you were a psychic and put in money every time the market dipped and only waited for the dips, you really wouldn't have that much more money over 40 years, maybe 100K more than somebody who just invested in a good company, no matter if it was up or down, over a specific amount of time. And they don't worry about having stop losses or anything. They just put in a specific amount of money over a general period of time. And when you do that, your gains are significant. And so that's all really dollar cost averaging is. It's like, okay, cool. This is saying if you just put in $100 in the S&P over the last about 40 years, you would have over $250,000 just off $100. And when we talk about the S&P 500, that's basically the entire stock market. That's not a good company like Apple that's getting you an 80% return on your investment. And we already know that would be crazy. We can look at a compound interest calculator after this. So if we're gonna do this, and I'm gonna talk more about this on, I think I'm gonna end up making this another class either Tuesday or Thursday. I'm gonna figure out what's better for the group. But basically, I'm gonna play with about $45,000. I'm taking over. I got another account I'm opening, and so I'm gonna play with about 45K in that with you all. But these are some stocks to watch, and I think Jasmine on. Is Jasmine still on? Yeah, she is. I think she getting her hair and nails done or something.
Yes, I'm still on.
I'm gonna start with the one you chose earlier. Like, so basically if we're looking at long-term stocks, the dollar cost average, we want stuff that's gonna go up over time. And we're gonna look at some of these, but one of the things we talked about in one of our earlier sessions this year was plastic surgery. And of course we went with the cheaper one, MLSS, but that really wasn't a whole lot to do with in plastic surgery. With INMD, the more expensive one was. And so this morning, I decided to take a look at INMD because, I mean, I know that you were right. I was like, Jasmine, I was like, man, everybody talking about plastic surgery, everybody getting them. I said, I see so many people with fake bodies up here in Memphis. I'm like, it ain't making no sense. I said, they stock got to be booming. So I looked at INMD. And so when I looked at INMD, and I look at over the last 5 years, what is it doing?
Going up.
Going straight up. If I look at, I was shocked. I was so mad. I was so hold on, make sure I ain't got no messages. I was so mad, Jasmine, because I was like, you know, we talked about this last year. You said 1 year. Look what it's done over last year. We talked about this since over the last 3 months. It's up 42%. So even after it took the dip, if you were dollar cost averaging, a lot of people say, okay, well, dollar cost averaging, we just talked about this, is buying every month at a consistent time, no matter if it's up or down. You're just getting more or less shares. So if you'd have bought this share at $90, it's now $97, 7 out of 9, you almost have a 10% gain. If you bought it at $68 when it dropped, and it's at $90 now, you have a 50% gain, but guess what? It's a gain regardless of when you bought it.
Right, but it's going up.
Right. And so when you dollar cost average, you're buying at a consistent period of time every month. That way you take your mind out of it, right? And so a lot of people are scared of the stock market because they overthink it. They're like, oh man, it's up or it's down. But if you're dollar cost averaging, you take your mind out of it. You say every month, I'm putting into a good company and it's going to give me a good return over time. And so that's basically what I did with Snapchat. I said, okay, cool. I bought in at 14, it dropped to 9. I said, you know what? I'm not going to sell. I'll just buy some more over time and I hope it goes up. I don't know if it will or won't, but now it's $60 a share. And I didn't even know that was dollar cost averaging at the time. So, and I'll show that this week. Again, I'm gonna play with about $45,000 this week, and then I'm gonna show you all an account and where I'm gonna put it. I'm gonna put it everywhere that I'm showing you, and then I'll show you some older accounts that I played with. So you were right. This company involved in plastic surgery is up 42% over 3 months. Over 1 year, it's over 200-something percent. Plastic surgery is taking off. And I honestly hate that Biden, they're going to cut off these payments because, you know, like these unemployment checks and stuff, you know, this is what they were putting it to.
Yep, and that PPP, unemployment stimulus, getting them bodies done, new booties.
Hey, that's what I'm talking about. Keep that. Let me stop. All right. So the question is, will that be able to keep going up now that some of that's going to be cut off? That's going to be something to watch. Let's go back to what's the PowerPoint? Let's go back to that list. So that's a company that you've definitely been right on. We just chose the cheaper one that really didn't involve a lot of plastic surgery. Another one was Apple. We always go with Apple. Lavita is winning on Apple because I know she's in. I know we got her in on it. And a lot of times people thought, oh, it's slow. Over one day, it looks bad. That's why you want to take your emotion out of it and look at 5 years. Which way is this stock going? Up or down over the last 5 years? Anybody? You're on mute if you're talking. Go ahead, Chelsea. Perfect. And so the last year is actually, even though this looks like it's about flat, what is this saying? What percentage is this up over the last year? Anybody see this number? Somebody talk to me. The mouse is hovering over the percent that is up over the last year.
45.93%.
Perfect. So if you had $10,000 into this a year ago, how much money would you have now? About, let's say it's about 45, it's close to 50%. How much would you have now? Anybody good at math? Where Carlton at? I know he at work.
I'm right here. What's going on?
Okay, let's say you had 45%. Let's say you put in $10,000 into Apple a year ago. It's up 45%. Let's say that's close to 50%. How much money would you have now? Around what?
1 second, let me grab my calculator. So it'd be 10.
Come on, y'all. Now look, half of $10,000 is $5,000, right?
It'd be $14,500.
Well, you specific. You down to the wire. That's right. So it's 14.5. So you would have made 4,500. If you had 100,000 and put into Apple last year, you would have $145,000 right now. If you had 200 and put into it, you would have close to $400,000 right now. Versus if you put this into a bank, you might get a 1% return on your investment, right? A savings account. If you would have put into just a regular index, it'd be good. You might get 5%, 9% over time, but this is 45% over the last month. Last year. So the good thing is over the last 3 months, even though it looked like it was up and down, it still gave you how much percent growth over the last 3 months?
I got a quick question.
Hold on. Let me go ahead with your question.
Oh, well, it's more like a comment. It's more asking. I'm looking at Apple right now. I don't have nothing in Apple right now, but it's down to $132.95 on Robinhood. How many shares would you invest in if you like a quick share? Like when you buy like 5, 10 shares?
So it depends on how much you can afford, right? And what we're talking about with dollar cost averaging is not just how much you can put in lump sums. Like Lavita's done, well, I don't want to name nobody else, but some of us have done lump sums and then we put in monthly payments. This whole thing is about putting in money over time because you may not have a monthly payment all the time or a lump sum. Not a monthly payment. You may not have a lump sum that you can drop in all the time. And you actually make more money when you put in a consistent amount of money over time versus lump sums. So what I would say is look at this over the past 3 months, you're up 10%. So I know Lavita got in about 3 months ago. So she's up 10% this year already, even though it was going up and down, right? If she's buying a consistent amount, no matter if it's up or down, it's eventually
Sir, how you doing?
Go ahead. You off mute. Go ahead. Okay. So if you're saying, should you buy Apple? Yes. I'm like, what percentage of your portfolio you should put in it? We can talk about that offline because I'm about to put about somewhere between 20 and 40, and I'm somewhere between $20,000 and $30,000 into Apple. And so I'll do that this week, and then I'm gonna be putting like a consistent amount. Well, I'm already doing that, but I'll show where I'm putting a consistent amount into Apple this week as well. But again, everybody don't have the same amount to play with. That's the good thing about dollar cost average. It doesn't matter. You're getting 10% over the last 3 months. Just put in what you can afford every month. That's the whole principle of dollar cost averaging. If it's $10, you ain't got to put $130 on $2 a share. If you got Robinhood, they'll let you put it in dollars, right? And you say, well, why would I do that? Like, it seems like it's slow money, right? We've done this before, so we're going to do it again with a compound interest calculator. Let's say you can only put in $50 a month. You got a family, you got kids. Well, this makes you do $100. Well, no, it don't. Let's say you put $100 in initially. You only put in $50 a month. Time span is 20 years. And you already know, we already looked at this. Apple over the last year has a 45% growth rate. So let's not even do 45%. Let's say you only put in $50 a month. See more people coming in. Good morning, Neil. Let's say you only put in $50 a month over 20 years. And let's say instead of 40%, you get a 20% return on your investment annually. Well, heck, off of $50, $160,000, $116,000 ain't bad over the next 20 years. And then as you grow, let's say you put in 100, $250,000. But let's say some of y'all on here are in your late 20s. Let's say, so 30 years, you'd be 50. 30 years, you had $1 million off $100 a month. And that's, again, dollar cost averaging, just putting in a consistent amount of time. This is only a 20% rate of return when we know that Apple's averaging right now over the last year 45%, which gets you, that says $2 billion. That's crazy. That's crazy. So when they say the tortoise, when they talk about slow and steady wins the race, I'm like, it really does. Being consistent, you ain't got to have a whole lot of money to win in the stock market. So let me stop there. Apple's a good company. What else do we have on here? Any questions? No, I want to stop and take any questions.
Jason, I have a question.
Okay.
With the Olympics coming up, what do you think the Disney stock would look like since they own ESPN and ABC?
Who owns Disney?
Disney owns ABC and ESPN.
I got Disney on here. So Disney. Just to recap I know some people just joined. We're talking about dollar cost averaging. And the only thing dollar cost averaging is putting in a consistent amount of money every month into good stocks, right? And we've gone through some funny stuff, but what analysts have figured out over time is no matter if you got a lot of money or not, let's say you're a psychic and you dropping in money only when the market dips, and you know every time it's gonna dip. We don't know many psychics that know that. But if they did, they still wouldn't have that much more money than somebody that just chose good companies and consistently invested in them. So over the last 5 years, Disney is up 78%. Even in spite of this huge dip, even when they lost, nearly half their value, they went back even harder. So if you would have just bought consistently into Disney, no matter if it was up or down, over the last 5 years, you would average about what, 15, a little bit over 15, about 15% a year, which is great. Like that's really good. If you're working with a company like Fidelity, who I had, I still use them, but I don't let them invest for me anymore. I do my own investing. But they, at their best, they were getting me 15% a year. So just in Disney alone, without you even thinking about it, no stop losses, no stop limits, no nothing, you would have a 15% return on your investment in Disney over the last 5 years. Like, you're doing it just as good as the best financial analyst with this company. So to answer your question, Shauna, how will the Olympics may help them? I think it might help them a lot. Over the last 3 months, they're down 5%. Last year, they're up 60%. So basically what we see is that they're trading with a range. So they need a catalyst that's going to take them higher. And what you just told me, like, actually makes sense. I didn't know that the Olympics was sponsored by Disney, so they're definitely going to get a boost there. Is my thought. So, we used to make calls on Disney. We might want to switch this up and do a long-term call.
I
Good.
agree.
That's a good catch. All right. Any other questions on what we covered so far from anyone? That's a great question. So let's look at some more. Let's look at Target, right? I've been telling people about Target recently over the last 2-3 months, and I'm about to put a lot of money into Target. I like their growth. So last day, they still growing. This don't make no sense. Like Target's going crazy. 3%. Oh, last month, 6%. Last 3 months, 23%. Last year, 100%. Like Target, like it's going straight up, and like their prices are going up, but people love going there. Like even more so than Walmart. They don't have as many stores as Walmart, so they have room to expand. Like this is ridiculous. Like I'm next week when I do this live session with like $45,000, I'm buying Target, I'm buying Apple, and I'll share some more stuff. I'm buying InMode, what I've already shared, the plastic surgery. Yeah. So any questions again on dollar cost averaging? I'm gonna go across the room and make sure everybody understands what it is. And if you don't, it's okay. So I think Trinity is new here. Trinity, what do you think about dollar cost averaging? Like, tell me what it is in its simplest form to you, or just say I don't know.
To me, it just means making consistent payments every time, same time each month.
Okay. So do you have like a Robinhood account, a TD Ameritrade account, or Fidelity?
Robinhood.
Okay, cool. So, you may not know on Robinhood, they do have this thing where it says buy, where it also allows you to buy recurring. So have you seen that yet?
No.
Okay, so when we get off, then I'll show you how to if you wanted to make a recurring payment, you can schedule it on your own. Like if it's $10, $5, but it's really simple. It's like, actually it might be up here right now. And I probably don't have any money in this account. Shares, dollars, buy Target. Oh, here it is right here. Buy Target, buy TGT. When you click buy, it tells you market order, limit order. Most of y'all's, like if the market is open, it defaults to market order. Limit order, for those who don't know, after hours, you can still buy stock. But the company has the choice to say if they're going to take it or not. It's called a limit order. But you can click this thing called recurring investment here. And it says, okay, cool. When I want this to start, I might get paid on the 1st. So July 1st. I don't want to pay this every market day. Heck no, I don't want to be paying no 500. Like me, I put in 500 a month. So I'm like, I ain't putting no 500 in every day. I'm going to put every month on the 1st. All right. And then I just go through with the order. You put in how much you want to put in. And it don't have to be, again, 500 in the Target. You can actually put in, this is $240 a share. It makes you, like a lot of people get intimidated. You can buy this in shares, put in $20 every month in the Target. At 100% growth rate, you don't have to be a mathematician or know over the last year, Target is up 100%. What in the world does that mean? That means if I put in $10,000, I would have made $20,000. That means if I put in over the last 3 months, it's up 23%. That means if I put in $10,000, I made $2,300 in the last 3 months. So Target's a good company to look at. Let's see what else I had on this list. And great job, Trinity. And perfect answer. Patrick, I know we got a session this week. I'm not worried about that. Twyla's a genius, so I'm not worried about her. Lavita's already doing it. Juliet, you good?
Yes, I'm here.
Okay, you good on dollar cost averaging?
Yes.
Okay, cool. So let's look at some other companies that might be good. We already looked at InMode Plastic Surgery. Let's look at Boeing. All right, BA. Anybody know what Boeing does?
It's an airplane company.
Yep, they make airplanes. And so let's look at the last 5 years. Man, they were on a good trend. They were a stable company. And the good thing is about them is they were paying good dividends. A lot of people that were rich, they just had, the only reason they had Boeing was for the dividends. They were like, oh, it's a stable company, but it gives great dividends. Now they dropped about March of last year really bad. Ooh, it was a great time to buy. They dropped like, I don't know, 200%. So, so the question becomes, well, I ain't gonna say 200%. They dropped a lot, like 70%. The question becomes, what direction is Boeing heading in now since they dropped?
They about to skyrocket because of COVID over and more people are about to start back flying, in my opinion.
Boom. So yeah, even if this is 5 years, even if it took a hit, yeah, you might have suffered for a year, your portfolio, but it's about to get back to where it was and keep going up even higher because more people are taking flights. I mean, shoot, I was flying during COVID. I flew for work and I flew for myself later on in the year. And like it went from hardly anybody flying, like easy to get through airports, to now I'm like, I went to, where did I go last? I don't know where I went. Oh, I went to Miami. Going to Miami, man, the airport was packed. It was packed everywhere. So I'm like, that means that Boeing's gonna start making more and more planes, stock prices going up. And again, they were already going up before then. Even with the hit, this says over the last 5 years, Boeing is up what percent? Anybody see this?
89%.
89%. So let's say 89 divided by 5 is what? Let me get a calculator. Oh man, somebody asking for the link. Yeah, so hey Carlson, get your calculator out. Do 89 divided by 5 while I send somebody this link.
It's like 18 or something. Let me see.
That's good. Somebody already know it off the top. Who was that talking?
Me, Juliet.
Good job, Juliet. So if it's 18% and your bank, if you put it into a savings account, is getting you what, 1-2%? Which one is better? The bank or Boeing? Anybody?
Boeing.
Yeah, that's a no-brainer. All right, hold on. Let me send this guy the list. So. Can you send me the slides, bro, so I can read? Yeah, I can send you the slides, Carlson. Actually, hold on, somebody waiting right now. So actually, what I've started to do, and my IT guy, I hired an IT guy. All of these Zoom meetings are now recorded, and now every one of these recordings actually goes to YouTube. So for everybody that's a subscriber, if you go to the membership page, I'm going to send you all out the password for the membership page. And this week, all of the videos are actually going to be on the membership page, like the private member page, and you can go look at any of the videos. So that's a great question, Carlson. And so I think we got somebody else that joined. We're close to the end. So what we're going to do is going to give a quick recap, and then we'll continue to look at stocks for another 10 minutes. So let me jump back into PowerPoint, give a quick recap for those who joined. Oh, wrong one. And so what we talked about to really make this simple this morning was dollar cost averaging. All right. And so there are two different things that people try to do in the stock market today. They either try to time it. They say, okay, well, let me wait till it's down at the lowest point or wait for the next stock market crash like I was doing. Even though I was investing, I was waiting for the next crash. Or you can dollar cost average. And so what we talked about is if you're a psychic, then waiting for the next crash is great if you can time it. But if you're not a psychic, the best thing that you can do in the stock market and what most analysts and people that are in the stock market recommend is dollar cost averaging. And so there was this huge, big definition on Investopedia about dollar cost averaging. It'll blow your mind if you try to read it and understand it. So what I did was just dumbed it down, made it make sense. And what it means is that you're consistently putting the same amount of money into a stock, an ETF, an index, or crypto every month at the same time. And for those who don't know about ETFs, let's say that you have like marijuana stocks that everybody's buying now because they think that the government's going to pass a law making it legal. And I think they are going to do that. I hope they do that before the end of this year. An ETF is actually a group of stocks. It's almost like a mutual fund, but it's a group of stocks that do the same thing. So instead of buying like Sundial or Tilray, you can just buy like a marijuana ETF and it'll have all of those in it so that when they do pass this law, it'll actually go up, right? Hold on, admit all. Man, so many people are joining like late. So let me run through this one last time, and then anybody else who's joins, then they'll catch up. They can watch the video. So again, we went over dollar cost averaging today. We talked about time in the market versus dollar cost averaging. To time it, you got to be like Miss Cleo. You got to be a psychic, and you really don't make that much money. Like a lot of people try to time the market, and then they'll put in one big amount. Like, oh, the stock market crashed. Let me put in $10,000. Okay, great. You might have made $20,000, or made another $10,000, depending on what company you put in over the last year. But somebody that's dollar cost averaging, they're going to catch up to you in probably a year. Like you made a lot within 1 year, but they're going to catch you in 2 years just putting in $100 a month, right? And all dollar cost averaging is, we made it make sense. Like again, it's just simply putting in a consistent amount of money, whether it's $50, $100. In my case, I put in $500 a month into certain stocks, ETFs, indexes, or crypto every month at the same time. And I showed Trinity a way. So a lot of people use Robinhood, where you can just click recurring payment and you never even have to worry about it. It comes out every month like it's part of your 401k. So we talked about, does it really work? And the answer is yes. If you didn't even know what stock to put your money into, and you just invested into the S&P over the last 40 years, you get around a 10% return on your investment. It's even higher actually than that over the last 40 years. And the difference between somebody who was, let's say somebody was God and they knew every time that the market was going to dip and they put in a lump sum versus you dollar cost averaging with $100 a month. They really didn't make that much more money than you. So dollar cost averaging really means that you're taking the stress factor out of investing, and the only thing you're doing is finding good companies to invest in that are going to grow over time, and you're putting in the same amount of money over time, right? And so what we looked at was, we started looking at different stocks for those who just joined. So one thing that one of our members, Jasmine, she told us at the beginning of the year, and she was right. She said, look, all these people buying plastic surgery, and we found this company called InMode, and she was right. That company's up 600% this year, right? That means if you put in $10,000, you made a $60,000, well, let's say, let me go back. Over last year, it's up 200%. So if you put in $10,000, you made what, $24,000 in the last year on this company that does plastic surgery. So over the last 5 years, you're up 600%. So that's one of the companies we would say to look at dollar cost averaging, because plastic surgery is the future, man. I'm like, I think Tony on, man. How many women you know around the city getting surgery done to them?
Can you hear me?
Yeah, I can hear you.
Oh, I apologize. I didn't mean to have my mic on. But man, I know I'm in an industry full of women. That's all they do. Every other month, I'm knowing someone that's going to get something done. And I didn't want to even mean to talk. I was just listening in. So hello, everyone.
Man, and that's the same thing Jasmine said. She been right. So I'm like, here's a staple though, an old guy. I forgot his name, but he's a 5th generation trader. He was like, Jason, if you don't do nothing else, Apple always gonna go up. It's been going up the last 20 years. So if we look at the last 5 years, it's up 453%. A lot of people are scared of it because it's just been trading in a range, but with dollar cost averaging, you don't care if it's up here or down here. You're trying to buy as many shares as you can because eventually over the last year, this company is going in what direction, up or down? Somebody, perfect. So, perfect. So since it's going up, it doesn't matter if it fell down, great. You got more shares. If it went up some and you bought up here, you got less shares, but eventually over time, this company, the price of it, the value of it goes which direction, up or down?
Up.
So if it's going up, that means it doesn't matter if you're buying at a low point or a high point, eventually it keeps getting higher. So the more shares you have, the more money you're going to have. So that means, again, 453% over the last 5 years. I think it's around 80-something% return on your investment a year. And this compound interest calculator that we looked at doesn't even go up to that amount. It won't even let me because it doesn't even think that that's possible. So let's say you put in $100 a month over the last, let's say over the next 15 years, at something getting you a 50% rate of return annually. That's $1 million off $100. And we look at Apple over the last 5 years, it's averaged 453%. Let me get my calculator, divided by 5. 453 divided by 5. 90, that's an average of 90% a year. That's way above 50% return on your investment. So that's why that's one of the companies that I would look at. I'm not going to tell you to do it, but I'll definitely do it at Apple. And again, I'm doing another, like I said, I'm doing another session later on this week. And I'm going to put about anywhere between, I said it's $20,000 to $30,000 into Apple. So I'll do a live showing where I put that in. You can watch that account. I'm going to open up, start growing another one. Basically, I have about 6 to 7 accounts, but I want to do that one so people can see the process and see that I'm buying what I tell you to buy. So what other companies were on this list? Or if there's a company that you want to look at, let me know. But we talked about Boeing. We talked about Target. For the people that just joined, I'm giving you these for free. You ain't paying for no one-on-one sessions. I'm like, you finna get this right now. So let's say Target. The ticker is TGT. So if you've been sitting in classes, you know what tickers mean. Perfect. Target just today has 0.3%. Like, it's beating the banks today. Over the last week, it said you gained 3.95% on Target. Last week, you made more than the bank gets you in a year if you had Target. Over the last month, it's up 6%. Over the last 3 months, it's up 23%. What does that mean? It means if I had $100,000 in the Target, in the last 3 months, I made $23,800. In the last year, it's up 100%. If I had 100,000, I made 100,000 over the last year with Target. Which direction is Target heading over the last 5 years? Where's it heading? Up or down? Anybody? I think I heard Juliet. Who was it?
I said it's going up.
Yeah, so it doesn't matter. When you dollar cost averaging, it's taking your mind out of it. You're like, oh, it's going down this month or it's going down up next month. dollar cost averaging means that every month, no matter if it's going up or down, you're buying into this company the same amount, whether it's $10, $50, $100, because you know that over time it's going to go up. So if you got scared when it went down, went from $77 to $55, honestly, that's the time to buy. Like Warren Buffett says this all the time to people. He says, when people are afraid, that's the time that I buy. He says, when a lot of people are buying, he said, that's the time that I kind of step back. But dollar cost averaging means that you don't even have to worry about if it's going up or down. You know, if it's a good company, it's going to go up over time. So you're going to buy, even if it goes up higher. You're like, man, I missed this buying opportunity low and it's high. Well, it's never going to go back down. The stock market is always going to go up and down. But over time, the overall stock market is a forward-thinking vehicle. So over time, the stock market is always going to get higher and higher. So what you want to do is pick companies like Target that's going to grow over time. All right. What else do we have on this list? And if there's a company you want to see that you think is good, let me know. We talked about Disney. Shauna made a good call with Disney. We do think that Disney is going to go up. Specifically, I didn't know that they were sponsoring the Olympics. The Olympics in Tokyo. A lot of people are going to watch it. Everybody's back outside. One of our team members, she said Carvana. I didn't even think that Carvana was this good. Anybody know what Carvana is?
It's that mobile car company, right? That you can buy like kind of like a vending machine type car.
Perfect. Carvana, over the last 5 years, it was like $20-something a share in 2018. It's $300-something a share now. It's up 2,000%. Carlton, use your calculator. What's 2,000 divided by 5? I'm gonna get my calculator and see what that means. Divided by 5. That's 400. That means over the last, on average per year, Carvana's averaged 400% return on your investment. So do I think that's slowing down some? Yeah, over the last year, oh snap, it's still 100% over the last year. And so one of our team members, one of our subscribers, Tori Bishop, and her husband, Keon, they the one told me about this company. I was like, dang, y'all right. Over the last 3 months, they up, even though it's up and down, a lot of people get scared. They're like, oh, it's going down. Over the last 3 months, it's still up what percent? Somebody see this up here. Somebody tell me what it said. What percentage is this up over the last 3 months?
16.92%.
Perfect. So it's up 16% over the last few months. What kind of business do you know of that's getting you 16% growth rate in 3 months? If y'all know one, let me know. I mean, I might need to get into it. So again, the thing is long term, whether you're putting in a consistent amount over time. Again, if it's up 2,000% over the last 5 years, that's an average of 400% a year. Over the last year, this thing is saying it's up 153% a year. And so with Carvana, what I learned from Keon and Tori is that basically you can go pick a car. I never knew this. You can drive it for a week and see if you like it. And if you don't like it, guess what you can do? Anybody. Somebody off mute. Somebody talking. Let's see. And they don't know they're talking. I don't want them to say nothing.
Earn it, John.
Because I'm on here.
Hold on. I'm trying to mute somebody. Hold on. Who's talking? And they don't know they're talking. Lord.
I don't know. How you know it's fake? Jasmine, you follow her?
I don't know. Somebody. Found her. Okay. Hey, Mark, was that you? Go ahead.
Yeah, you pretty much once if you don't like the car at the end of that week, you can return it.
Perfect. So how many dealerships can you go to and say, hey, I like this car. Let me drive for a week. And then if I don't like it, I'm gonna get it back to you. I mean, some might do it, but how many of you all know dealerships that do that?
None.
None for a week. They probably give you like a day or 3, day to 1 to 3 days. That's about it if they do it.
And guess what? On Carvana, from what I'm told, is that you can pick it online, they deliver it, drop it off. They may give you a key or something that they send you. You ain't ever got to deal with a person. How many of y'all get tired of somebody like you walking on a lot? You trying to take your time, pick what you want, make sure you happy because it's a personal decision. They just trying to sell you anything and all in your face. I mean, how many, like, I get tired of it. I don't know if anybody else does. Anybody else get tired of that? Oh, well, maybe that's just me. But Carvana, great company to look at. Let's see. Anything else that y'all want to look at? Again, I got a list of them here that I'm just giving out. One company that the graph won't show great that I say look at is CGC. A lot of people that are younger on here probably already have it. It's a marijuana company. And the only reason I say CGC is because I do expect Congress to pass a law making marijuana legal in the next 12 months. Let's look at Bank of America, actually. This is one of Warren Buffett's companies that he invests in, BAC. The ticker is BAC, so whenever you have a company that you type in, the ticker is always going to be to the left. And so sometimes when you're around a lot of people that are involved in the stock market, they won't ask you what's the name of the company. They're just going to ask you what's the ticker because they want to go straight to it. So for those who subscribe, you already know that. For those who don't, just wanted to get that out. So Bank of America is up 2%, almost 2% just today. Last 3 months, it's up 8%. Last year, it's up 73%. Last 5 years, it's up 200%. So Bank of America, Warren Buffett had this and people thought, well, it wasn't going to do that well. He's just taking his time. It's going slow. Then it took off, right? The last year, it went up 73%. It was trading within this range. So if somebody was dollar cost averaging, they were getting a lot of shares at a low price, right? About $20-some a share. Does everybody see that? You had to talk to me. Let me know you can see what I'm showing. Anybody?
Yes, we see it.
Perfect. So then a lot of people, they get scared. They're like, oh, it's going up and down like Apple's doing right now. And we already talked about how good Apple is over time. They usually go up about 700% and then they do a split. When things are slow, but it's a good company, that's the best time to buy because you get more shares at a discount. And now it's at $41 a share. It's up 70-something% in the last year. So Warren Buffett ain't no idiot. He was sitting there saying, okay, cool. You know what? Anytime something bad is going to happen with the economy, it usually happens every 15 to 20 years. There's a mini recession. You know who really benefits from it? Banks. You know why they benefit off of it? Because of inflation. And they going to make sure that they take advantage of it. And so he invested in Bank of America. People was like, why did you do this? And they should have just followed him. And now he's up 73% in the last year. And he believes in dollar cost averaging. He believes in owning a majority of as much of a company as he can. And yeah, it just works, dollar cost averaging. So any company, anybody else in the last 2 minutes, and I'll go a little over if somebody wants to look at a company, any company that you think is good, that you might want a dollar cost average. Go ahead.
What about Plug Power?
Plug, okay, PLUG.
Did you hear me?
Yeah, you said Plug Power. I'm looking at them now. Can you see it?
What is the ticker? Hold on one second.
The ticker is Plug.
Yeah,
Plug.
PLUG.
Right. Hold on, let me go. Yeah, Plug Power.
Mm-hmm.
What are your thoughts with that?
I have a few grand in plug, and plug, honestly, I don't know. Like, the reason I didn't list Plug, I think Plug is a good company over time, and I think they're priced right now for them to be a good company to dollar cost average, right? With the world going more towards EV, I do like Plug. And consistently, I mean, just look at the numbers. They're up 1,700% over the past 5 years. But for those who subscribe, like I tell you, I always say, look at the trend, but also look at what's the second thing that I'm going to go to that we should look at. Anybody?
You talking about whether they met their quarter or not?
Perfect. So for those who don't know, a lot of people just look at trends and they get happy based off of trends. I'm not a trend person. Plus, I don't like that it took this big dip. It just means that they were over bought. But they're still a good company according to the trend. But I always go down to the earnings. So what I would say is if Plug consistently meets their earnings, I say, yeah, that's a good company. But in some cases down here, they miss their forecast, right? And so the good thing about a company like Apple is that they don't miss their forecast hardly ever.
Excuse me.
Go ahead, I'm sorry.
When you're done, I want you, if you can look at a stock for me.
Yeah, sure.
Thank you.
Yeah, I'm gonna do that right now. So just an example, Apple never misses their forecast. So honestly, am I about to put more of my money in the Plug right now? No. What I'm gonna do is look at, I put on this PowerPoint, and we can talk about it offline in our one-on-one sessions. I'm looking at blockchain, right? Like the United States is about to do a lot. It's already doing stuff with blockchain, which is like one of the foundation pieces for crypto. Like, and they're talking about doing it at a government level. So I'm gonna be looking at blockchain before I look at Plug right now. I will be looking at the EV space, but we'll talk about that offline because there are some good companies for growth. Go ahead, Juliet. What company did you want to look at?
NASDAQ.
Okay. Oh, you just want to look at the index. So the NASDAQ over the last 5 years is up 174%. Nice. So NASDAQ, let's look at them. What's that average out to be over the last 5 years? What's 174 divided by 5? Man, that's nice. That's a good 34% bump over the last 5 years. Girl, you welcome here anytime. So last year, NASDAQ is up 50%. I don't think nobody knew that. Girl, so you've been buying them?
No, I'm thinking about buying them. So I'm just putting this down. That's why I'm on here. I'm learning because hopefully by next week I do want to start investing.
Well, look, I need to talk to you. See what else you got on here. What's your second pick? The last 3 months, this NASDAQ is up 21%. Last month, 7%. My God. Last week, it had one of those weeks where it went like flat, which is good. It don't matter if it goes down. Your dollar cost averaging, it doesn't matter. You picking something that's going consistently up over time. Girl, what else? Put that down on this. What else you got?
Well, I'm not home, so, but give me a second. I'll look.
Okay. Anybody else have anything they want to look at? I'm gonna stay over.
Yeah, can we look at Sonos?
What's it called? You have Sonos?
Sonos, yeah.
Okay, hold on. Let me write down the.
They took SONO.
Yeah, so this is not it. SONOS is not it. SONO? Yeah, okay, cool. No, I was in it. Okay, this is it. So what we're gonna do, look at the last 5 years. 5 years is up 118%. Tell me about them. What do you like about them before I go too deep in it?
Like the company and stuff, like what they do, or?
Yeah, tell me about it.
So it's a audio company. Like they make speakers, like for your home, for your boat, for your car, like whatever. But the thing about it is they're all wireless. So, I mean, they only pretty much got to plug into, a power outlet, and they run through your Wi-Fi all over your home. And you can have one speaker in one room, another speaker in another room, another speaker in another room, all of them playing like totally different things. or they all can play the same thing and have your house, you know, on swole as far as music wise or whatever you want to listen to. So I fuck with them. I actually own a couple of the speakers, but I got into it originally 2019, but ended up getting out. But I didn't got back into it again. So like as of recently. So I just want your thoughts on it.
Brother, I like what I'm seeing, and I like the way you explained it. So like what I always say is that if you buying into the stock market, if you're looking at companies, you kind of want to do like Jasmine did and what you did. You say, look, you can tell what companies are good. Just go see what people are buying a lot of and see what has like the best application that's out there. Like for me, I've always looked for speakers that can connect to each other, but I really ain't found that. And now you told me Sonos does that. I'm like, I don't want
I ain't gonna lie to you, they ain't the cheapest of speakers now.
It doesn't matter. So this is the thing that I learned too. Like people will pay for convenience. I'm like, a lot of people are like Maybachs and stuff. It's like, yeah, because it's a name, but it also has convenience. It has features that other cars don't have, and people will pay for that. Like the reason that people pay for employees is not because they can't do the work. They pay because it's more convenient for them, so they can get more stuff done. So for me, I'm gonna pay for more. I'm like, I'm glad you brought this to me. So I like the company based off their trend first. I always tell people, all my subscribers know it's like your trend first. The trend is there up 118% over the last 5 years, a little bit over 20% a year, which is great. Like,
well, yeah, it's only been on the market since 2018. So
man, that's great though. Still, I'm like, dang, 18, 19. Yeah, that's great. So last year they're up 139%. It's leveling off, which is good because it's not dropping. So last 3 months, it's down 8%, but it's okay. It's just evening out. The big thing is that I tell people, if I'm really gonna buy this, I need to go look at their earnings. And guess what? They've only missed their earnings. Really, a solid miss was one time, right? So they're a pretty big company. And guess what? Everybody's saying hold or buy. So you know what? Yeah, if you asking me, I would definitely be buying this company. And I'm gonna put this on my list to watch. If you believe in them, the data says to buy it, man. I'm like, I don't see nothing saying not to buy it. Let me see. Let me look at 1 year. So it fell through its previous support level and it's forming a new support and resistance. So technically the lowest it could fall back to would be about 20. If it does fall, it's probably only gonna fall to about 26. And since they're a strong buy, I don't anticipate them falling. I'm just talking through this myself. Yeah, I like them. Anybody else have anything they want to look at?
Man, take a look at UCO.
I got one, Jason.
Hold on.
Energy.
I'm gonna get you, Courtney. You said somebody said UCL.
Yeah, UCO.
Okay. Hey, and Neil, go ahead and tell me yours. I'm gonna write it down so we can get yours next. Your thing is you were going in and out. Go ahead, Cornelius. What you got?
Vertex.
Hey, it's real. We can't hear you. Can you put it in the group chat in the chat in our
It's an energy company.
Put it in the group chat in our Signal group. All right. While you put it into the group chat, what I'm gonna do?
Okay.
Hey, I can hear you now, Neil. Go ahead. What you got?
It's Vertex Energy.
Vertex. What's the ticker?
On the seat. Yeah.
Hey, put it in the group chat. It's going in and out again. All right, let's look at UCL. So let's look at the oil company. Last 5 years it's done what? Somebody tell me it's down what percent? Somebody see it? Anybody see this up here where I'm pointing at?
87%.
Yeah, so let's look at the last year. The last year is down. Last year is up 182, 85%. Let's look at 5 years there. So it fell down, and now it's up 185%. It was trading within a range. It could go up to what? 541, but before it fell off, 541, $79. So what do you like? Who mentioned this company? What do you like about them?
Man, I actually just was reading about looking into oil and gas, and I just found this company. Man, it wasn't really much that I liked about it other than it was cheaper than what it was, and it had plenty of opportunity, and it was a booming company before pre-COVID, but it just kind of went down after COVID, like when COVID hit.
So this company is interesting. I never seen this leveraged alert. So it says inverse and volatility linked ETPs, specialized short-term trading vehicles that may not be suitable for all vehicles. ETPs trade on the market like any other security. It's a collection of other securities. Let's go back. It allows you to trade options. I mean, over the 5-year history, it looks like it's trying to go back to where it was. A lot more people are traveling. Let's look at the last 3 months. It's up 44% the last 3 months. Last month it's up 24%. Last week it's up 7%. Brother, I don't know who you are. Who is this talking? Who gave me this?
Man, Party, I did.
You got my cell phone number?
Nah, I got another one for you too. GUSH. Look that y'all know too. It's on the same thing.
I've been in Gush. I've been in Gush. I don't tell people about that because it's risky. But like, Gush been winning. I mean,
yeah, Gush winning. I rock with Gush.
Yeah, I paid for my school off Gush.
Okay.
Yeah. All right. No. Hold on.
Hey, Tony invited me to the journey. I can get your number from him.
Yeah, get my number. Hold on.
All right, I got
you. Well, where you get this from? Hold on. I mean, long term, like, yeah, I'm a little nervous about it, but this shit, last week, 7%? You trading options on this bad boy too?
Yeah, man, I got like 30 shares of it. Like I bought, when I first bought my first 15, I bought them at around $30.
Hold on. I'm right, put this on the list. This joker nice. Pro shares.
Yes, it is.
Man, brother. Boy. How much the options cost? I'm gonna see. Let me just see. 79. Oh, that's a 1 week, July. Man, the prices on this joker ain't even bad. They ain't bad. But the problem is they only go out to, no, they don't. They do go out further. Man, don't mess around and tell me $90-something. Hold on. We can go out of the money. Can we scroll? Can we go anywhere? Let's see. How far? 14, 13. Oh, brother. Tell me, okay, you said you trading options on this?
Yeah, I just like traded my first option like the other day. So
I'd be looking at this. This $400 option right here. I'm gonna put. I ain't gonna say what I'm putting into. I'm gonna boy. Because you can do in the money, out of the money, at the money. Like I would do an out of the money call on this one. And man, like Jesus. Like it only costs you $400, but you can get multiple. You're gonna double your money. Like you gonna make if you bought $400 in this on the way it just went 24% in 1 month. That means you're probably gonna make 100%. You're gonna double your money in 1 month. So I'm about to get about 3 of these. Anyway, I'm gonna get off of that, man. We can talk. That's over nice.
Yeah, I'm gonna hit you up about that then. Yeah, I'm gonna definitely need to learn a little bit more about this. Sure.
Man, okay. I'm gonna come back to your second one because Neil had one. Neil, did you text it to me or put it in the group message or something? Oh, let me see.
Yeah, I texted to you, man. My phone tripping. I'm up here. I just left the casino, man.
And did you win us some money?
I
Hey,
broke even.
that's good. This would scare me, man. This would scare me. I like this company, but I mean, I like what it just did, but it's scary. When something go straight up, it make me nervous. So I know you breaking up. We really can't hear you, but
Yeah,
I would say, tell me, what does this company do?
it's an energy company. I just looked at their earnings, and their earnings been hitting pretty good. And I was looking at this, and I'm like, oh, this might be a good company. I'm gonna check them out a little bit. I just got them, and
Man,
I I ran across a couple. Like, I wanted to ask you about like some real estate stocks. They said I ran across some real estate stocks, said the dividends check that said something about the federal government supposed to be paying shareholders for half.
man, I like Reef's real estate investment funds. Let me. So this again, this company scared me, man. I'm like, it went up. Let's look at the last 1 week. It's up 22% of the week. Last month, it's up 419%. You know what scared me about this company? Why I wouldn't put a lot of my money into them is this earnings report. Like they hit and miss. I just have to, I
Yeah,
would, me personally, with my money, I would have to know more about like they product and believe into it. It says it turns in the recycle, waste streams, office, all specification, commercial, chemical products. Say, man. You know, for everybody that subscribes, like you, Neil, there's a portal. Set up on like there's a little link that I put in now. Y'all ain't even got to call me. Just click on that link and let's have a one-on-one. And I want to hear more about it. Cause I
all
mean, it
right.
looks like it could be okay, but if you ask me if I put my money into it, I won't touch it because I just don't know enough about it. And they earnings ain't good. They ain't meeting their forecast, so it scares me. But I do like that in the last month it's up 419%. The last week 22%. Shoot, it might be a good options play. Let me see what they're running on options.
That's what I was thinking about it about. Option play on it.
Yeah, let's say you did one expiring October, and you're talking about break even 1248. Yeah, I mean it's a good options play. It's affordable $200, 1248, and the last month is up what $7. Yeah, it's a good gamble on your options. Like you might want to roll it for a week and then get your money out and then see what it does and then go back in. I would do it if you're gonna do an option. I'll be looking at like this 248 or this $248 mark at that $10 strike price because they're only gonna cost you $248. You got until this is October for it to hit. The only thing I'm scared of, man, I'm scared of a reversal on this because it went up so fast. Mm-mm. I need
Yeah, I
to,
said it went up too fast too.
yeah, I need to chart it. I'll play with Trading View. Let me put it on my list. I'll play with Trading View later on today. I got a meeting at 12. I'm gonna play with it later on today and chart it. What's it called? What's the ticker? Somebody trying to come back in. Vertex Energy. I'll find it. I'll find the ticker. All right. Who hasn't spoken that wants to go? And then I'll come back to somebody else had one more because I'm overtime, but I'm staying on for y'all. Anybody else?
Dexcom,
What's the ticker?
SDXCM.
$430. Last 3 months, up 24%. Good one. Last year, 7. So it's up and down. 5 years is up 400%. Ooh. Okay, tell me about them.
It's just a metal, it's basically, it helps people that have diabetes. It's like a device, a medical device. Yeah, so you have diabetes. It's been going up for a while. I've been watching it almost for the past year. So I was like, okay, let me ask you about it today.
7% over last year.
Yeah.
What's that earnings report look like? I buy. I mean, I wouldn't put a huge percentage into them like on my portfolio. I might put like 5% of whatever my overall investment is every month because I know what Apple's going to give me over time. This company is good. 1 year they're up 7%. The last 5 years they're up 475, which means they had a huge growth spurt, and since then they just been in a range. That's from something in 1 year. What have they been doing the last 2 years? 19, 20, 21. You know what? Yeah, it's something that I would do. Because last 2 years, they're kind of like Apple. Some years they might be relatively flat and then have a jump. And they've been doing that for the last 5 years. They've been relatively flat, then they have a jump, which is better. It's actually great for dollar cost averaging because you're getting more shares at this low price, then it jumps and your shares are worth more. You're getting a consistent amount over a few years up and down, then it takes off even more. So it's got a pattern that it's doing. So yeah, I like it. That's a good one. Write that down too, Dexcom. All right, cool. That's a good one. That's a great one. Anybody else have one? Yeah, I'm staying over because y'all helping me. Y'all telling me where the money is. What else y'all got? Nothing. Well, look, we didn't open in prayer like we normally did, but we definitely gonna close in prayer. So definitely appreciate everyone for joining on. We know this was random. I usually keep it pretty open, but we didn't really advertise. We want to keep this one for subscribers and just people that we personally know. So definitely appreciate, again, friends of friends are always cool. I enjoy doing this. So I may open up another one next week. And that way I know when we open it up, we normally have 40 plus people. But I think this one's actually of value. So we'll probably open it up, do one more of these. I did say I'm playing with 45K this week, so I will have a second session this week. And since I'm playing with 45K this week, then I'll probably turn that one to a dollar cost averaging and we can do it live. For everyone who isn't dollar cost averaging already, I did say I want to get you into the market and dollar cost averaging within 48 hours, which means by Monday when the market opens. So if you're in the group, just reach out to me. If you're not, you already know how to reach out to me anyway. And if you already have a broker, perfect. Just set it up for recurring payments, whether it's $10 a month, $20 a month, find companies that you like. Feel free to reach out to me, and definitely appreciate you joining on Saturday morning. So with that, I'm gonna do this closing prayer because everybody got work and stuff to do. Father God, we just thank you, Lord, for this day. We thank you for this time that you allowed us to be together, Lord, to learn about financial markets, Lord. Lord, we just ask you to touch our minds and our hearts, Lord. Continue to open up our minds to these markets, Lord, and guide us in the way that you will have for us to win, Lord. We know that your will is for us to prosper, even as our souls prosper, Lord. And Lord, as you bless us financially, Lord, we'll be a blessing to your people. These blessings we ask in your son, Jesus' name. Amen.
Amen.
All right. Enjoy y'all.
Y'all have a good day.
Appreciate it. Y'all be
Georgia.
good.
Appreciate you.
Yes, sir. Hey, Neil, I'm gonna get up with you. I'm probably gonna call you now. Call me now.
Okay.